with that, we move on to the next panel discussion, the structural shake-up of Indian family offices. For this, I would request Mr. Kunal Savani, partner, Cyril Amarchand, Mangaldas, Mr. Kuldeep Sikarwar, President and Head Private Wealth, Nuvama Private, Mr. Anuj Kapoor, MD and CEO, Private Wealth Group and Venture Capital Funds Platform, JM Financial, Mr. Nitai Utkarsh, Lead Investment Strategy, Hero Motocorp. A big round of applause, everyone, for all the speakers on the dais.
Good morning, everyone. Uh, I think being third on the list, I think our predecessors have done a good job of, introducing and setting the stage for the discussion on family office. We really had a good discussion about the leadership within the family office. What is a panel, and the topic allotted to us is on the structural shake-up in the family office. So as a panel, what we intend to discuss is on couple of mainly two, three themes, which is one on the structures of the family office. Like, we all have been discussing and about family office. Me from a legal background, technically there is no definition of a family office. And, family office has been understood in different ways. So what we intend to do is to discuss a little bit about the structures, how things were done in the past, and what are the trends, and how things are picking up, which would really help to understand the structures of these family offices. The recent trends, I'm sure everybody been reading in the newspapers that Singapore, Dubai, the offshore jurisdictions, you've been catching up a lot. And why? What are the real advantages? While we say that these jurisdictions are there, but I'm sure there are some practical difficulties which people do face while they set up. So we have this esteemed panel, and we look to discuss those issues which would benefit at large. And also in terms of the investment trends, as we just heard that family investment, and one of the objectives which the wealth managers should keep in mind is about to grow the family wealth. I totally agree with that, but at the same time, I do understand. I think different families would have different perspective, and they may also want to de-risk themselves, or diversify their wealth. So yeah, and then lastly, if time permits, we would try and touch upon the roles of professionals in this family office. I'm sure a lot of you are from that spectrum, and how it is, and the role have been expanded so much. So largely, these are the three, four themes that we plan to discuss. Not taking further time, I think we'll start onto the panel discussion. Onto the first thing on the structure. And the way I would like to keep is, it can be open, and all of you, I would request all of you to share your thoughts on each of the themes. So, as traditionally we have always seen, family office was always, people within the same structural outfit, like, the main operating entity used to have people sitting there, and, the promoters used to guide them. It was more of, just hand holding paperwork and all of it, and which obviously now we're seeing so tremendous change. Like, we have dedicated structures around that. And obviously, they evolved in terms of even setting up various companies, LLPs, or even in terms of the trust structures. So what have been your experiences? And Nitai, I believe you have been, been pioneer in setting up the single family office, multi-family offices. What would like to, I think if you could begin with.
Sure. Thank you so much. And good morning to all of you. Family offices obviously have evolved in a big way in India. And I think from where we started maybe 15, 20 years ago to now, things have dramatically changed. And when I say 15 years ago, I'm referring to the concept of family office, which is more popularly known today. Obviously, family offices traditionally have been around for generations and for years. Very popularly, we used to call the family office heads Munimjis or estate managers, or by very many different names in the past. They used to do something similar to what we do today. They used to manage the affairs of the family. They used to be the confidants of the family members. The Munimji used to know exactly where the income is going to come from, who's going to really spend what, and how does the rent come from different properties that the family has, where are the investments made traditionally. So all those affairs used to be managed by that entity, that person, or that team. I think over the last 15, 20 years, that same setup has been professionalized. There is an institution to that today. There are structures, both legally, formally, informally, that have come up now. But the most important thing which continues to be there is that this team or this set of people are supposed to be the confidants of the family. They're supposed to manage the affairs of the family, and not just investments, but obviously it goes far beyond investments. The succession, the income and the cash flow management for the family, the family business itself. How does the family business grow? What kind of business succession happens in the family business? What kind of succession happens in the family wealth? So it's a lot of those factors, and over a period of time, each of these things have developed in terms of importance. When we started 15 years ago, maybe it was all about investments. Now, when we talk about family offices, it is more than that. It is about figuring out where to base your family office, for example. Like you said, we are talking about structures in Singapore, Dubai, or many other places, looking at offshore investments, looking at diversifying the risk that the family has. So many different aspects have come up, but I believe that the core of it is still the fact that the family, which is obviously worked so hard over generations, has built a certain wealth, has got a complicated life, and they don't have time to look at each and every aspect which is important for them. And that's why they need a team which can do that, which can be kind of an interface between them and various service providers which are there in the industry. They need investments expertise. There should be somebody in their family office team who can speak to the investment managers who are there around the spectrum. If they need legal advice, there should be somebody in their team who should be able to translate their questions to the legal professionals and get their answers and translate it back to them. They need tax advice similarly. They need succession planning advice similarly. If they need to get some advice on bringing their fortunes on a global stage, similarly, you need to talk to advisors. So this interface, and an interface which the family can trust, I believe that's the structure of family office, and that's how the family offices have evolved over time. Maybe it started with a simple interface which was only talking about investments, and now this interface is much broader, and it really deals with a large number of service providers on a large number of issues.
Yeah, thank you. And I agree, and I think even from regulation space also, I think there have been so many regulations and different financial products where you need this kind of expertise in house. And yeah, agree. But talking more about the structure, Kuldeep, maybe if you can throw some more light on in terms of the structure and the trust. We've seen so many families opting for the trust structures. Any thoughts on trust or any other structures for the family office?
Sure. Good morning, everyone. Thanks, Aditya, for the opportunity. Happy to be here. And just to build on Nitai and then coming, on what Kunal is asking. When we started 20 years ago, it was we used to speak to the business owners, and as a business owner running a successful business and focusing on investment, it was very difficult to get mind share. And as family office, as Kunal mentioned, and Nitai built on, is very loosely defined, but at least the way we see it, it's the bridge between somebody, a professional team, to make sure that the wishes of the business owners are, the financial wishes at least, are properly put into place. So it's a bridge between service providers like us at Edelweiss and the wealth that is sitting at the business owner's end. And as the stakes have grown, family offices have got larger. One of the largest family offices is sitting right here. So as the stakes have grown, people have realized that it is important to have professionals managing this large amount of wealth. And as all of you in the room, I'm sure most of you are, part of these family offices and making sure that the entire wealth is getting managed properly. On the structuring, at least our experience has been that while family office is loosely defined, it is just the pools of capital that are sitting in various entities. It may be family trusts have become very important, mostly because of succession issues, and we have seen a lot of families going through their own issues. And CAM have done a lot of work on making sure that the family agreements are in place. But it can be a trust, it can be a private limited company, it can be a LLP, individuals. In some cases where the main operating company is unlisted, we have seen even the unlisted company is a source of capital where the financial investment kind of framework is defined, and the private company, because it does not have to answer to public shareholders, can do a investment as the owners wish. So it's very, very flexible, and that's the beauty of this entire structure, that the uh, the structure can be molded in a way that the business owners can express their financial wishes in the way they want to.
No, I agree. And, even in our experience, like in the past, these things were more driven by the tax structures. Of late now, what we see is, tax is just a subset. In the past, depending on where the taxability is less, and, that investment vehicle was just purely being used. Now, the key criteria is pooling of investments so that there is equality and transparency within the family. And, which is where we see that, a lot of these trust structures are becoming, and they're the best structures. Because even if, even in terms of listed shares also, if the shares are spread amongst different family members, through the trust structure, you try and pool and bring in that equality so that there is no dispute even in the future generation. Yeah. So, but and as I was discussing that, and what Nitai just built on is that the trend. While we have this India growth story, everybody's looking at India. There is this Amrit Kal for the next 25 years that we've been talking about. But at the same time, there has been quite a huge migration of the multimillionaires from India, and the recent reports about people setting up or looking to set up these offices in Singapore and Dubai. So Anuj, what would be your experiences? What are your, what are you hearing from the HNIs, or when whom we are dealing with? What are they really looking at?
Sure, thanks. I think what you're raising around offshoring of wealth and people looking to establish family offices overseas is pretty much becoming common theme today in our conversations. Pretty much in every single conversation that we are having, family offices or promoter wealth is thinking about offshore jurisdictions as well. The primary theme here being that clearly diversification is the way to go for a lot of these people as far as their wealth is concerned. And secondly, if you see the younger generations as well, a lot of the kids are going overseas to study and they're continuing to stay there. A lot of the founders in India, a lot of the ultra high net worth individuals go to holiday and have their second homes in places like London, Dubai, or other jurisdictions as well. Now, when a large part of your life and your 4 months in a year is spent overseas, then that's also a theme that's playing out, that why not have some part of the wealth to meet the expenses out there and for future generations if they want to spend time overseas. So I think people are increasingly thinking about offshoring wealth. And I would say, while the Indian markets and the Indian product structure has matured immensely over the years, but there's only as much that you have access to in the Indian market. Currency fluctuations and the rupee versus dollar has also been depreciating considerably. You can assume a 3 to 5% depreciation annually. So that's another factor which plays into why people think about diversifying into international products. The currency appreciation aspect plays out, and they have access to products which are not available in the Indian market. I'll give you an example. I mean, we recently transacted on a fund of fund products which invests into the GP shares of some of the largest funds in the world, like a KKR or an Actis. Now, that's a product that's not available in India yet. In fact, it's not available in the retail market in Asia as a whole. An individual check size for investment into that product is $10 million into that fund. So, and this is a $45 billion fund raising their next $12 billion fund. So access to these kind of unique products, which are not available in the Indian market, is also something people are increasingly thinking about, and They want diversification of risk. They want diversification of currency. They want the flexibility to, have part of their wealth overseas. And hence, some of these countries are actually even encouraging Indians to come and establish their offices, their family offices there. Places like Dubai are offering huge tax ops. And similarly, Singapore, these are perhaps the most favored jurisdictions these days.
Yeah. So that's been even our experience also, that, and given the fact that the overseas education or these investments, and I think even in terms of the future, for the next gen and for the, even I think tax is still playing a major role, and especially given the last couple of years when the surcharge was introduced. I think, and that coupled with the COVID implications and things happen. I think we are seeing so many queries coming in. So again, tax has become a forefront in terms of these thoughts of going across. And as you rightly mentioned, that there are these jurisdictions who are just laying red carpet to them, come sit, discuss with the regulators. And in fact, Dubai, I know that there are these separate different areas where they offer as low as 0%, like while they are trying to catch up with the OECD requirements, but still they are ways around for achieving 0% taxation. So yes, that's been the trend. Just building up on that, in terms of the investment patterns, and what Nitai just mentioned in the past, that from the traditional where we're looking only at collecting the rent incomes or FD interest, and just small bits and pieces managing those small sets of investments. So like obviously the trends have changed. There are so many mature products also available in India. So what Kuldeep, in your experience and everybody's experience, the new avenues, the new set of products that family offices and the professionals working there, they are looking at to diversifying themselves.
Sure. Very interesting question. And, when you are trying to predict the future, it's always good to have a disclaimer. But at least the trends we have seen last 20 years or especially last 10 years has been that earlier the nature of investments was very simple. Families were doing mostly, fixed income, fixed deposits and other things. But if you are very simple in the structuring, then there's no need of all the professionals, like us who are sitting here. So we have seen this trend of families. One is formalizing their entire thought process and the investment strategy, but also looking at avenues where you can get risk-adjusted higher returns. So you will have a benchmark of a risk-free return, and then what else you can do to build on that risk-free return. And we have seen avenues like even Anuj touched upon across the spectrum. And at least our experience has been that family office, each mandate is very, very unique. We have family offices who only do FDs or AAA, kind of a tax-free bond. And we have family offices who only do PEVC. I'm not touching on crypto. It's not the good word right now. But the spectrum is very, very kind of, different and broad. And that's why the need for professionals who understand, each of this space, understand the risk reward, and are able to go back to the principles on the advantage and disadvantage. Because for each service provider, our product is the best. But the idea is for you guys sitting on that side, evaluating of this entire risk reward, the philosophy, and the does it fit into the investment mandate, so to say. So the trend, at least what we have seen, is that family offices want to take some risk. We became very, very risk averse, and as the economy went into a slowdown after 2008, we have now seen risk coming back. Risk is becoming favorable again. And each family expresses risk very differently. Some may say, I want to do an alternate strategy around distress assets or around owning some physical real estate or something. Or some may say, I want to do a PEVC kind of a model, or I may become a funder into some other operating company which somebody is starting. So at least broadly, if I have to say, we are seeing more risk taking, and we are seeing at least as we go towards a $10 trillion economy in the next 10, 12 years, more of this, what Kunal and Anuj picked upon on this internationalization. Convertibility will come partly and fully eventually. So some families want to be there before it happens, to understand how the foreign markets work and to be ready when the trend eventually comes. But I think risk taking is definitely on, but in a very, very nuanced and risk-adjusted way, and not a total all-out, all or nothing kind of thing. So I think broadly we are seeing more risk-taking, more professionalization, more need for understanding various avenues and ideas, and to be able to understand, absorb, and come back. And even reporting earlier, it was very easy to make an investment and forget about it. But as the time periods have grown, people also want to, kind of regularly review, evaluate what was promised, what is getting delivered, and how things are shaping up. So these broad trends is what we are seeing. But we'll be happy to hear from other panelists.
Yeah, Nitai, maybe your views.
Yeah, no, I think you've already mentioned the spectrum of products that's available, and I think it's kudos to the evolution of the capabilities of our financial system, and not just in terms of people who are manufacturing these products, but everybody who's supporting them, right, from figuring out the legal framework and the tax framework around it, to obviously the investment framework around it. Maybe I'll just talk from the other side of the table, like you said, and talk about how it's important for family offices and families to evaluate these new age products that have come about. It obviously, to look at equity and fixed income, it's been there for ages, and there are a lot of models which exist to evaluate whether you want to invest in one particular stock or bond or some other stock or bond. But when it comes to these new age products, where, for example, you're investing in an unlisted company, whether through venture debt or venture equity or private equity or growth equity, whatever you may call it, or you're investing in fractional ownership in real estate, or you're investing in lending to unlisted companies against their revenues, or a whole host of other things that have come about. And you need to also develop and create those frameworks to be able to evaluate such new age options. And it's not easy because every day those options are changing. They also are maturing as you try to create these frameworks to evaluate them. Unlike equities and fixed income, which have gone through their years of evolution and maturity, these are products which even the regulators are not very sure about how to deal with them. So it will take time for sure, but while you spend that time in getting these products matured, as a family office, you also need to create those frameworks to not lose the opportunity which is there right now. Because if there is somebody who's offering you a fractional ownership in real estate, there is somebody who's offering you a high rate of interest to lend against the revenues of a startup, why should you let go of them just because you are not capable of evaluating the competence of that particular product manufacturer? So you need to be very skilled. You need to constantly keep updating yourself. And as service providers here in this room who are talking to family offices, I think it's important for you guys also to educate the family offices that you deal with in terms of how to really create these frameworks to evaluate yourselves, right? You're going there, you're bringing a product to these guys. You hope and expect that they are able to understand what you're saying, and they're able to evaluate you, and they're able to allocate money to you. But a lot of times, the guys on the other side of the table are just like you, and they're also trying to struggle to understand what you're talking about. So I think it's the responsibility of all of us here in this room to educate each other. If we hope that there is capital allocation made to our individual products. So, I'll use this platform to kind of make an appeal to everybody to not just look at family offices or family business owners as people who understand everything and who are able to allocate to you based on the material that you're presenting to them. I think it's very important for you to also educate them in terms of how they should look at you guys, how they should evaluate you, especially if you're trying to bring out an idea which is different from what has been in existence for so long. So I think that's been my experience in terms of trying to create that framework, constantly trying to innovate, and taking help from all the peers in the industry to do that.
And so, that's wonderful to hear from both the sides of the spectrum. And, taking from what Kuldeep also mentioned in terms of the risk-taking appetite, I think, what we are also seeing there is that the more and more family offices, they're getting into these new age technology companies and startups, and, taking risk portfolio is high, which, as against to the past, where, idle up, which would, always seen as a VC or a private equity role. So Anuj, what has been generally in your experience, like, how are these investments different? Like, when a family office tries and looks and invests in these kind of area versus when a VC or a private equity, I think there is again an overlap, but what are your views on these different kind of products, or the returns, or what do family offices in your experience look at?
Sure. I think, first of all, if you see the PE industry in India, for instance, PE flows into India, FDI flows were probably not even $4-5 billion 15 years back. Today, PE VC flows into India are exceeding $50 billion a year. My sense is this grows to $100 billion in the matter of 2 to 3 years. Those are the kind of flows we see coming into India through the FDI route, on top of which there will be FII flows coming in as well. Now, I'd compare this in a way to VC flows as well. Now, VC flows will be a fractional part of this. It's predominantly PE flows, which have grown immensely. VC flows have just started. Tech is a new buzzword. It's literally less than a decade old in India, so to say, the new age tech. I don't mean the IT services industry. And we see these also growing as the size of the company and the scale of the industry also grows. Now, what this means is this will require a lot more investment. The size of the company grows, and hence the kind of investment products that could be offered to family offices would also diversify and grow. I mean, venture debt as an industry, for instance, was not even prevalent 6-7 years back. It's literally started, and there are a handful of players playing in that market. And it's literally 2 to 3% today of the total venture equity industry, whereas globally, certainly less than 5%, whereas globally, venture debt, broadly speaking in the West, the thumb rule is it's about 15% of the venture equity industry. So that's the scope of growth in venture debt, for instance. Now, again, as we think about these products for our clients, I think first and foremost is the risk appetite of clients. And also, as I mentioned, clearly we need to also assess what innovative products we are bringing based on the risk appetite of these individual family offices. I think this whole corporatization journey, or the institutionalization journey for family offices that is happening, will lead to them literally working as corporates, and risk getting evaluated by professionals like my fellow panelist in a very, very structured, in a very, very methodical fashion. And as the size grows, family offices will pretty much behave or be conduits to institutional investors. Today, we are seeing IPOs happening where large checks, or pre-IPOs happening where large checks are coming from individual family offices. And they are, in some ways, actually calling the shots in or having a big say in the IPO pricing as well. So that's the corporatization journey. And I think these kind of innovative products, these kind of differentiated products are just about beginning to happen, and there'll be more diversification. But, the prime focus is to assess what the risk appetite is. Of course, educate, your clients around the new products, but make sure that, they are fully understanding the risks and the various other aspects associated with the product before investing.
That's really helpful. So Anuj, actually, this brings to the another theme that I wanted to touch upon, which almost Nitai and everybody said, that the role of these professionals, like earlier it was the promoters or just the key family members who used to take these decisions. But as we saw that, and I believe a lot of people are from family office, and they're playing those roles. So what are the expansion of the roles, the journey of these professionals that you see, and what extra thing that they can bring on table. Maybe you can start.
Yeah, sure. I think the role of these individuals has also gradually changed quite a bit from being generalists earlier. I think there is an increasing importance of specialists. Because when you are trying to work as a conduit or as an interface between families who have very little time to spare for a lot of these activities, and professionals in the industry who do this as their daily routine and their daily activity, it's very important for this interface to be highly skilled, because they need to not only understand the real problems that the family is facing and try and solve them, but they also need to understand the technicalities that are available in the market, in the financial services market. So they need to be able to have that human touch, to be able to understand what the family is talking about, to be empathetic to their problems, to be able to translate their problems into action items. At the same time, they need to have that skill set to really be very logical and technical at times about the kind of solutions which are available in the market. So it's not an easy skill set, or it's not an easy combination of skill sets to have, because you're asking an individual to be both right-brained and left-brained at the same time. And I think that's really the kind of skill set that that needs to be developed if you want to cater to family offices, whether as people working in the family office itself or as service providers who are talking to families or talking to family offices. You need to have that right balance between the right brain and the left brain to be able to really talk to families, at their level, and at the same time talk to experts and professionals and product and service providers at their level. So, and for that, you need to be a specialist. So I think that's the kind of evolution that we have seen from people earlier being very, very, maybe more technical. Now I think it's a more balanced approach that's required. I think that's been the shakeup, at least as far as the team or as far as the people are concerned.
Any experiences like, or in terms of while we are talking of happy family, and there have been obvious situations where may not be just pure disputes, but difference of opinion, especially when it comes to family. If one member or part of the family would be looking at investments differently, the other must be looking at differently. How would these professionals play these roles, or any experiences on that front?
So yeah, I mean, of course, it's not a simple answer when it comes to that. But I think what the panel before us mentioned in terms of creating a family constitution and a charter helps, because if you have the frameworks, it's easy for any professional who's dealing with the family or conflicts within the family to really use that framework and try and resolve those conflicts. But again, like I said, you need to have that empathy towards the problem or the conflict itself to be able to solve it. You can't strictly quote the constitution and say that, okay, the constitution says that you're not supposed to get this money, so you are not going to get it. But if that person is really out to set up a new business and can really add a lot of value to himself or herself or the family, you need to provide for some sort of a structure within the structure. So I think it's important to have that framework, but at the same time have the flexibility to understand the conflict and resolve it. So no single answer to that, but I believe using the structure, using the framework, and using your inherent skill set to be empathetic to the problem at hand, I think that could really help.
I agree, and I think that's even on the family constitution side and the charter documents. I think that does play a important. At least that's one of the way of bringing everybody in the family on table, arrive at the consensus. Kuldeep, maybe your thoughts on the same?
Sure. So I think the bigger problem, as Nitai also mentioned, is how rigid is the constitution and how much flexibility you want to build. But on a lighter note, we saw at least 3-4 family offices where the business got sold and the promoter had a lot of money but no business to run. And obviously they had a professional team managing it. So, the team very uniquely, in a very unique way created a pool of capital where the promoters could themselves decide and be very, very active and, keep the bulk of the capital separate to manage it in a very professional way. So, yeah, so I think depending on the scale or the severity of the problem, one can find solutions within that. I think as family office professionals, I think we are seeing, as Nitai mentioned, a lot of education, a lot of going up the curve. Not only looking at returns earlier, it was very easy for our side of the business, saying that you'll get 20%. The 20% is not the question. Question is, how are you getting that 20%? What risk are you taking? What things are you doing behind to get that 20? So I think the discussions are getting very, very deeper and much sharper. And I think the relationships are also getting much longer. And we at least are seeing, as as we look at hiring for our business, hiring is not easy. It's difficult to find talent. And even on the other side, when we meet families, they find it difficult to handle or hire the right talent and then make sure that the talent remains there. And as Nitai mentioned at the beginning, the Munimji was the guy who never left. He used to be there for with the family for 40 years as professionals. And I think, Nitai also has been there for, last 15 years in the same family office. The question is, how long is long term? And we are seeing increasing, one trend I forgot to mention is the family office professionals co-investing with the principals wherever the structure allows. So it allows you skin in the game. It also allows you to participate, on some unique things that large family offices are able to do. And also, I think we are seeing a lot of principals now being open to sharing some benefits of the returns that one gets, because the idea is if the family is making an X return, and as a professional, if your remuneration is linked to that ultimate outcome, we are seeing now a lot of families being very open, unlike earlier, and part of it is driven by the professionalization that we have seen in the industry. So yeah, I think I'm sure all of us are excited to be in the markets every day. A lot of new things come up. You get to meet a lot of new people. I at least am jealous on that side that you guys have all the fun meeting new people who come up with new brilliant ideas and evaluate. But yeah, as long as I think we all of us are excited to be in the markets, to meet new people, to look at new ideas, and keep making sure that the old is getting delivered in a proper way, I think it's a happy place to be in.
I think that's exciting to know, that the family office professionals are also putting in the skin in the game, and as Edelweiss, you are providing that platform. That's really amazing. And in fact, in my experience, I've also seen, organizations like Edelweiss or JM, in case of, when the families are separating, in terms of amicable settlements, I think they do play a very critical role in terms of, giving them the market insights, giving them the trends and, how things should be done. But yeah, so I think, these institutions are definitely important. And, also as Nitai mentioned that not one size fits all, actually, these professionals, they are also on the education curve. They are also looking at, the knowledge and the technical updates from us as service providers or from the wealth managers. So new, everyday new products which have been coming up, all these NFTs, cryptos, so many legal hurdles around it, or even in terms of the market intelligence about it. So yeah, I think that's been a wonderful discussion. And one thing I think to gain this knowledge, I think platforms like this, Equalifi and Aditya, and they're playing a real great role. And these can be the forums where we can exchange these ideas, at least get to know what are the hurdles that can come across, and try and identify and resolve them. With this, I'm mindful of the time, and maybe we can open the floor for very quick 2-3 questions, if there's, yeah, please.
Hi, my name is Chanchal. One of the issues that we face as wealth managers slash multifamily offices, whenever you're pitching into a new client, you are perceived as a product manager, right? Whenever you go there and you speak about the concept of a family office, the question is, okay, how will you get? Oh, what returns will you get me? Will you get me with 15% returns? What returns are you targeting? It's very difficult for us to explain that, look, this is not a return targeting segment, right? And the second question is, what products do you have in hand? So my query here is, I want to get that pitch from you. How do you pitch a family office to a family business? Because this has been the most challenging phase for me, more challenging than explaining a structure to a client. So yeah, that's one query I have.
I think you would like to.
I'll try to attempt that, although I may not be the right target because I run a single family office. So I think what you're talking about is pitching a multifamily office offering to a family business that doesn't have a family office. I think it really boils down to what we heard in the previous session, where what was important is the role of a family office, whether a multi-family office or a single family office, to help the family retain and grow their wealth and to help the family grow their business. A lot of times, families are sympathetic to people who talk about their business rather than their investments. So I think if you approach it from the business side, and if you are talking to them about, say, for example, strategic investments related to their business, rather than purely financial products, that could be a better foot in the door. to set a dialogue about their overall needs rather than only their investment and return objectives. Because a lot of times when you go there and talk about a structured note or a PMS or an AIF, that's all that you are limited to or restricted to. I mean, they will talk to you as a PMS, AIF, or structured note provider, not really as an advisor. But when you go and talk to them about their family business and tell them that, okay, this is, for example, we are in the mobility space. So you come to the promoters of, say, Hero and tell them that, okay, you are in the mobility space. There are a lot of changes happening in mobility. There are a few electric mobility companies that we know. There are a few last mile connectivity companies that we know. Why don't we organize a couple of meetings with them for you? Just try and understand what they're doing, whether or not you invest. Maybe it could be some strategic help to what you're doing. So if you start the conversation from there, maybe it'll be easier for you to establish yourself as an advisor. But if you start as a financial product specialist, may not be that easy. I mean, that's been my experience at least.
I'll just add a couple of points to Nitai. I think if the segment is right, so not everybody needs a family office. I think a good place to start is 100, 200 crores kind of financial assets. So if the segment is right, unfortunately, this is a long cycle, sales cycle. But the good news is once the sales is done, hopefully the relationship is for life. And one way, and we can have a discussion at the coffee time. But I think a good way to demonstrate is your value. Ultimately, all products are you're offering some value. Value to offer is right now you're not doing it efficiently enough. There is so much of cost involved. You can maybe bring down the cost. So there are various things you can talk about what a family office is supposed to do, and there's a reason why all of us in the room, because there is certain value getting delivered, because no Indian promoter will pay if he's not getting value. So if you can get the value proposition right, I think the sales cycle, because you'll need to develop trust, will be slightly longer, but it will be worth the effort that you're putting in.
I think that should suffice. And I think we are short of time, and maybe all of us are there available, especially the panelists, and breaking for the tea. So I think we can have that additional questions at that forum. So thank you very much to all three of you. It's been a wonderful insight, coming from the industry, from the family office side, and from the investment side perspective. It's been wonderful discussion, and I hope we've been able to value add to the specialist services available over here. Thank you very much.
Thank you once again to all the speakers. A big round of applause for all of them. And with that, I would request Mr. Alok Sasmal to please come and join me on the dais for the felicitations of the speakers. I would request you to stay for a photo, please.